Hey market friends. Welcome back to Will of the Market. Today we're gearing up for what could be the most watched earnings of the year. NVIDIA's next report. Think, The Matrix, meets Wall Street, cutting-edge tech meets serious money, and the implications go far beyond one stock. We'll talk about what NVIDIA does, why its earnings matter for the economy, and how investors are feeling right now. Let's roll. What NVIDIA does and why it matters. First, a quick refresher. NVIDIA is a leading designer of graphics processing units, GPUs, and the company has become a cornerstone in the artificial intelligence boom. Their chips power data centers, large language models, AI training, and are critical to generative AI infrastructure. Why this earnings report matters? Because NVIDIA is not just a tech company, it's a lightning rod for the direction of global tech spending, AI capital expenditure, CapEx, and even how fast various industries adopt automation. One Reuters piece estimates its upcoming earnings could trigger a $320 billion swing in market value. If NVIDIA reports strong demand and guidance, it sends a green light sign across tech, AI, infrastructure, cloud providers, chips. Basically, it can fuel growth everywhere. If the guidance disappoints, it could signal the opposite, that the AI boom may be plateauing. In short, this is where the rubber meets the road. Potential economic impact? Let's zoom out. Imagine this is Inception. We're looking at the level below what most people see. NVIDIA's earnings could ripple through big tech CapEx. If NVIDIA's demand stays hot, that means companies will keep investing heavily in data centers, which supports cloud services, GPU supply chains, and infrastructure. Semiconductor industry. Strong NVIDIA results mean semis may rebound, benefiting suppliers, manufacturers, and even emerging markets tied to chip production. Productivity and automation. Better chips equal faster AI equals more automation across industries, manufacturing, logistics, healthcare, which equals potential productivity gains, which feed into GDP growth. Stock market sentiment. Because NVIDIA is a large component of indexes and sectors, its tone can swing how investors feel about growth stocks in general. On the flip side, if results disappoint or guidance slows, it may act as a wake-up call for the broader tech, AI-led economy, raising questions about investment, margins, and growth expectations. Recent investor sentiment going into the report? So, how do investors feel? There's noticeable bullish momentum. One analysis reported the put-to-call open interest ratio for NVIDIA options is 0.61, meaning many more calls than puts before earnings. Analysts are optimistic. For example, IB analyst data expect $1.25 EPS and $54.9 billion in revenue, plus 5-6% YoY, for this quarter. At the same time, there's caution in the market. Bloomberg, Reuters note that investors are watching for signs of cooling demand in AI or chip CapEx. Some institutional selling. A report noted that major investor SoftBank Group sold a $5.8 billion stake in NVIDIA ahead of earnings, which raised some eyebrows. In sum, the crowd is hopeful and leaning bullish, but there's a "don't get too comfortable" vibe in the back of the minds. Sort of like, the Empire Strikes Back, you're winning the battle, but the war might still have dark turns. Conclusion. If NVIDIA were a character in The Avengers, it'd be the one with the cosmic power tech, able to swing big, but also needing the right moment to strike. The upcoming earnings could either supercharge the next leg of the AI boom or reveal cracks in the armor. My take. This is a high-stakes moment, not just for NVIDIA, but for the tech sector and parts of the economy that depend on AI and infrastructure. If I were you, I'd watch for guidance on AI server demand, data center spending, international regulatory issues, and supply chain pressure. If you liked this, hit like, subscribe, and comment, NVDA, if you want to follow up the moment earnings hit. Until next trade, may your gains be sharp, your stops safe, and your market instincts everywhere.